This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
White House trade advisor Peter Navarro said India's purchases of Russian crude were funding Moscow's war in Ukraine and had to stop. New Delhi was now cozying up to both Russia and China, Navarro wrote in an opinion piece published in the Financial Times on Monday. If India wants to be treated as a strategic partner of the US, it needs to start acting like one. India's foreign ministry has previously said the country is being unfairly singled out for buying Russian oil while the United States and European Union continue to purchase goods from Russia.
Oil prices rose on Monday after White House trade advisor Peter Navarro said India's purchases of Russian crude were funding Moscow's war in Ukraine and had to stop. Brent crude futures rose 30 cents, or 0.46%, to $66.15 a barrel by 0629 GMT, while U.S. West Texas Intermediate crude was at $63.19 a barrel, up 39 cents, or 0.62%. Navarro said in an opinion piece published in the Financial Times that if India wants to be treated as a strategic partner of the United States, it needs to start acting like one.
Moving on to the top news in the energy sector.
South Korea's nuclear power output is racing ahead of official targets due to fewer maintenance outages, a new plant coming online and reactors running at full tilt, helping to rein in generation costs and pushing down coal usage. Generation from nuclear plants grew 8.7% year-over-year in the 6 months through June, 3 times official plans for 2.9% annual growth, while coal-fired output plunged 16%, data from state-run utility Korea Electric Power Corp showed. The basic principle of generator operation in the power market is minimization of generation costs. Nuclear power generally has lower fuel costs than other generation sources such as coal and liquefied natural gas, a Korea Power Exchange spokesperson said in a statement to Reuters.
China's exports of refined products, including diesel, gasoline, aviation fuel, and marine fuel, rose 7.1% year-on-year to 5.34 million tons in July, according to customs data, maintaining the strong momentum from last month and reaching the highest monthly total since June 2024. Diesel, gasoline, and aviation fuel exports in July all saw year-on-year increases and showed strong export momentum. Diesel exports surged in July, up 53.2% year-on-year to 820,000 tons, reaching the highest level since September 2024. Exports for the first 7 months were down 37.7% to 3.63 million tons. Next, we have the top news in metal markets. Aluminium prices in Shanghai and London slid on Monday, as the United States added more of the metal's derivative products under the 50% import levy, blurring the demand outlook. The most traded aluminium contract on the Shanghai Futures Exchange closed daytime trade 0.68% lower at 20,600 yuan, $2,869 per metric ton. Earlier in the session, the contract hit 20,550 yuan, its lowest level since August 6. Meanwhile, the benchmark 3-month aluminium on the London Metal Exchange dipped 0.65% to $2,590 a ton as of 0800 GMT after touching the lowest since August 12 earlier.
Gold prices eked out gains on Monday, helped by lower U.S. Treasury yields, while market players awaited U.S. President Donald Trump's meeting with Ukrainian President Volodymyr Zelensky and European leaders later in the day. Spot gold gained 0.4% to $3,348.28 per ounce, as of 0840 GMT on Monday, after hitting its lowest level since August 1. U.S. gold futures for December delivery rose 0.3% to $3,393.40. The firm tone to gold prices has returned today with the market nudging the $3,350 level, as the combination of soft yields and a weaker dollar would for sure create a tailwind for gold, said independent analyst Ross Norman.
We will now look at the top news in the agricultural sector.
China extended on Monday its anti-subsidy investigation into European Union dairy imports by 6 months, showing little sign of let-up in a two-front trade war with Brussels and Washington that threatens to upend its export-orientated growth model. The Ministry of Commerce said it had prolonged the investigation period to February 21, 2026, citing the case's complexity. Beijing's decision to extend its probe into some EU cheese, milk and cream products comes after it rolled over in June an investigation into European pork, of which it is also a major buyer, and in July announced duties on EU brandy producers, though major cognac makers were spared provided they sell at or above a minimum price.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.